I'm Nolan Luke. This is Insurance Info You Need to Know. Today I have Jessica Littlejohn. Jessica, how long you been with me?
Probably about 10 years now.
10 years. Well, look, I just want to let you know you do an incredible job, all right? And I know over the last 10 years we have promoted you. Now you're our office manager, and you do a great job. What I want to do today, I want to spend about 8 to 10 minutes because, we got all these, hurricanes coming down the pipe. We have claims all year. And really, I'm going to call this podcast, Homeowners 101. So really what I want you to explain, I'm going to ask you questions, but I want you to explain every piece of a homeowner's policy. So if the customers, are looking at this, or potential customers are looking at our podcast, if they want to take out their homeowner's deck sheet, they could take it out, and we're going to go step by step, okay? So first of all, when we say dwelling coverage, what that means to you.
So your dwelling coverage is really the coverage for your main home. The exterior, the interior, flooring, cabinets, it's going to cover the house itself.
All right, so your dwelling coverage is really the section that you live in, right? Mm-hmm. Well, I know we have a tremendous problem with, hey, my house is only worth $100,000. So what's the steps to develop or establish your dwelling amount? What would you do first?
So we're actually putting in the property features for your specific house, your square footage, your exterior construction, whether that's brick or vinyl, number of bedrooms and bathrooms, and what we're calculating is rebuild costs. And unfortunately for our area lately, we've seen that rebuild cost really doesn't correlate to the property value at all. Rebuild costs are very high right now, but we are calculating if you have to rebuild that home from the ground up, what those construction costs are for our area.
All right. I know you and your staff does a great job. So we gather the information, the square footage and everything that you talked about. We plug it in what is called a costimator, I think, correct? Mm-hmm. And that costimator comes up and establishes that dwelling amount, right?
Yes.
So at least our customers, I know I feel comfortable with it. At least when we establish that, we know that's what the company's giving us, and that's not made up by us as a member. It's really company specific, and they the ones who came up with that, correct?
Correct.
Right. Another feature of the dwelling amount is other structures. So tell them when they're looking at that, most customers don't understand what other structures. Can you explain that a little bit?
Yeah, so your other structures coverage is really going to cover your stuff that's detached from your main home. So this can be your fence, this can be a shed, could possibly be a swimming pool if it's an above ground pool, pergola, deck, something that's not attached to the physical house itself, but you may need coverage for it still.
All right, so there's two things on that. So if you have a garage, but it's not attached,
detached garage would fall under other structures.
Other structures
as well.
Also too. So I know that usually if you look at your homeowner's policy, other structures is based on what? How do they come up with that value?
So standard company limits will populate 10%, but a lot of companies will allow you to decrease or increase this based on your specific situation and what you're looking to insure.
So if you're telling me if you have a $500,000 house, normally what the company would give you is 10%, which would be $50,000, correct? And that's how it gets based, 10% of what the dwelling amount.
Correct.
And now you're telling me that they have the flexibility. They have a swimming pool, they got a garage, and they got they got expensive fence. They can add additional coverage.
Correct.
So what if somebody has a house with no fence, no garage, no nothing? Then it allows them to decrease it, right?
Yeah.
So if you decrease it, you can save a little money.
Absolutely.
And if you had to up it, it's going to cost you a little money too.
Yes,
right?
sir.
All right. So we understand what dwelling coverage and how we establish that by a costimator. We go to other structures, which is everything detached, and you have the flexibility of going up or down. And I would increase your premium a little bit or decrease, or you can settle on a 10%, right? Mm-hmm. Another thing of a policy is really, we call it personal property, but it's your contents of your home. That's all the same verbiage, but in a policy language is called personal property. Tell us a little bit of what's personal property.
So personal property is going to be your personal items in your house. The way I like to explain it to customers is hypothetically, if you picked your house up and tipped it upside down, everything that's going to fall out of that house is your personal property. This is your furniture, your clothing in your closets, food in your pantry, toothbrushes in your cabinets. All of those belongings are personal
So
property.
really, you're telling me is that really only thing that's part of the dwelling is what's anchored down, right?
Yeah.
But all the pictures, the rugs on top of your regular flooring, that's everything is contents.
Correct.
So how that's usually based? I mean, it's what the company usually does. I know it's like other structure where they give you a percentage, and then usually that percentage is what, 50%? Usually it's a basic.
Yep.
But can you do the same thing?
Yes, you can. So standard 50% of your dwelling coverage is included for your personal property limit, but most carriers allow you to increase this or decrease this based on your personal situation. And you know better than us what's in your house and what the value of your personal items is and how much coverage you need. But if you're looking for premium savings, that is something that you can decrease to save some money. Or if you feel like you have a lot in your home, you can increase that. It may cost a little more, but it's definitely available.
What's awesome, what's the main, subject, we're talking about homeowners, but what I'm starting to hear is that, don't settle what the company's getting, really create
Your policy.
your policy, right? Because I know in the olden days, you bought a policy, it was given to you, and that was it. But with the high prices today,
You got to look at your coverages specifically,
You gotta
what
look-
you need for your situation.
awesome. Well, they got one more, well, they got multiple, but one more thing, or two more things I want to touch on. It's the loss of use, right? And that's something that, most clients don't have no idea what that means. So can you explain loss of use on your policy?
Yeah, so loss of use coverage is going to kick in when the house is unlivable from damage covered under the policy. And this could be for a couple months while repairs are made. It could be for 9 months while the house is being totally rebuilt. And that could cover a bunch of different things, really, from a different place for you to live, the cost of rent or the cost of a hotel, or maybe just a storage unit for you to put your personal belongings into while repairs are being done to the home. Could cover additional living expenses like food if you have to eat out, gas to travel to and from work, different things like that. So always save your receipts for any extra expenses that are incurred. Submit them to your adjuster because it may fall under that loss of use coverage.
Right. And look, I know everybody got different guidelines and a little bit about what they cover and whatnot. So the smart thing is keep your receipts, give it to your agent, and let them apply to see if it's covered,
Yeah.
right? So what you're telling me, this lawsuit, my house was burned down and had to go get another house to live in. Would they only pay a certain percentage of that, or they pay the whole, if that rent bill was $2,500, they'll pay the whole thing?
They should pay the cost, reasonable cost. You have to go get the same
Like
size
kind,
house.
right?
Like kind. But if whatever your rent is, they should be paying that up to that policy limit.
Awesome. Well, we talked a little about what is the dwelling and how you establish that. We talked about the other structures that, 10% comes, but we have the flexibility. We also talked about contents at 50%, but you have flexibility. You can build it for your own need. What does loss of use usually come in with? Is that something that's 10%, 20%? What usually
A lot of companies are standard 20%, some of them are standard 10%, but that number can usually be adjusted. If you need more or less, this is a number that you can critique based on your situation. Some people say they don't need it, they've got a family member they can stay with, and they choose to trim that coverage to save money right now in the current market, which is totally understandable. And some people, they don't have any family nearby, and they know they're gonna need that coverage if something catastrophic were to happen to their home. And some of them have used it in the past and choose for higher limits because of their experience using it in the past. So it's really particular to you and your situation, how much you want to carry.
Awesome. Well, I know that they got a couple, other things in the policy, which is, your deductibles and stuff. But if anybody's interested in, learning more about deductibles, what's a deductible, what's a AOP, what's a hurricane deductible, what's a named storm deductible, we already got a podcast that we shot. So they can go look up deductibles in our library, and it teaches everything about deductibles. So first of all, thank you for what you do for our organization. Thank you for explaining Homeowners 101. Thank you for being here.
Absolutely, my pleasure. Thank you.
All right, appreciate you.